Let's look at the US government 10-year Treasury bond yield. And it feels good to see how the 10-year Treasury bond yield, started rising from March 2020. That's very impressive. So this is more like a summary of, you know, the US 10-year bond yield. It's a key benchmark barometer used in the financial markets to gauge the state of US economy. It's very important if you're a trader to know the price action of US 10Y and combine it with the dollar index to get a clear directional bias. So this is a demand floor and also the beginning of the rally. And to see how from 0.32 we have seen the US US 10Y accelerate from 2020 from 0.32 and to where we are today 4.0. The yield is really doing well. You know, the yield is really doing well. So after now we'll look at 30-year bond yield and I will draw a verdict. So this is our SR support become resistance and break of structure. And if you're wondering why price has bought there, of course it's very simple. We have a price action here. And you can see how price reacted there. SR1, SR2, and final SR3, and the price has moved on. So then we'll have here as another critical area structure, resistance becomes support on weekly time frame. Resistance becomes support on break of structure on the weekly time frame. Look at it on a line chart. So when you look at it on a line chart, you best understand what you're doing. Two RS level, RS1, RS2 on a weekly time frame. RS1, RS2 on a weekly time frame. Break of structure, retest. RT slash SR, where support become resistance after break of structure to retest a broken resistance structure on a weekly time frame as now a current support. We reacted here in 2018, we reacted here in 2022, and we came back 2023. You can see it from the line chart. So on technical, that becomes a strong demand floor in the future that if the yield is taking correction from this rally, remember the 10-year treasury bond yield has been on a constant rally since when gone since 2020 since 2020 since 5 years now. The US 10-year treasury bond yield has been in upward trajectory and it could take correction at any time. I mean, no one can actually tell. So if it's going for correction, I'll be looking at 50% retracement, which is somewhere around here. Is a very nice level to wait for price. And I also want to put that up. I want to put it up. So in case it seeks retracement, 50% retracement at this level, it's not going to be a bad idea. 50% retracement at this level. Yeah. But for now, let's not go into this at we'll discuss it when price comes into that, and let's try and keep a minimal lines as possible. So we're looking at two critical things we look at in our strategy: the demand floor and the supply roof. On a weekly time frame, this is your demand floor and this is your supply roof. It's your demand floor on a weekly time frame on ascending trend line. ATL. And this is your supply roof, still on ascending trend line on a weekly time frame. ATL. So let's put some of the reactions into perspective. we have here as ROS, and this is actually a breakout from the structure. So it's not just ordinary ROS. This is a retest candle. Every reaction on that supply roof is a retest candle, and I can see it. The reaction started from here. It's a breakout from the support structure. It's a breakout from the support structure. Retest 1, retest 2, retest 3, retest 4. So these are all retest candle to broken structure on the weekly time frame. So it's not just ordinary resistance. So let's take this out because we are dealing with retest candles, multiple retest candles on ascending trend line. Look at it on your weekly line chart for you to best understand it. The first reaction is here. From that reaction, the market made a divergent view and subsequently became a, retest and that formed an ascending trend line. So on technical, I expect that on weekly TF that so now we have a demand floor. From the demand floor, we have series of SR structure, support become resistance on weekly time frame. 1, 2, 3, 4, 5. Good. So that has given us an ascending trend line and as well the demand floor. And the last time we touched this structure was in November 2021, and you have seen the yield on a upward thrust. And the beauty is to see there was a price action at this level where we had an SR level convert to RS level, and a breakout that interchange creates a new price action. You can see here we have your SR support become resistance, break of structure came back, retested, and this is what we have here: retest candle 1, retest candle 2, retest candle 3 in 2021, break of structure, break of a supply roof 1, 2, 3, 4. Price return here as a demand floor where support become resistance, and you have seen a stronger rally that became a new focal point, and you have seen liquidity from his level, and you have seen the 10-year treasury bond yield went parabolic. And as the price continues to move, there is a pending resistance structure which emanated from 2018 October. Let's put it into perspective. When price returned here, it respected it before breaking the structure and returns here as a retest and went on again to test 2023, an ascending trend line that had series of touches: RTRS1, RTRS2, RTRS3, RTRS4. That is price action trading. So it is what it is. It is what it is. So the next trade idea is going to be on this ascending trend line, which we've got here. Now you see, if you look from your line chart, you will see we have here a resistance structure, break of resistance structure, retest 1, retest 2. So if we continue in this pattern, then I'll be expecting a pushback into the structure. A pushback into the structure will give us a double confluence where two ascending trend lines meet to give us a high probability buy there. So if that happens, then you expect that the yield will most likely go up again. So if we pull back into the structure, then that would be that parabolic move again. So the yield could get back into 5.67. I don't know, but I think there's a potential rise in the US 10-year treasury bond yield based on the structure of the market. We have a strong demand flow at this area. So when price returns here, there's going to be a double confluence where an ascending trend line meets an ascending trend line, creating a high probability buy trade. And from here, I would like to buy US 10-year treasury bond yield at this level, and hoping that we go back to clean this correction. This is a corrective wave. You can see we have here RTRS1, RTRS2, RTRS3, RTRS4, and we have seen a correction and price to continue surge into 5.57%. This is my perspective based on the structure of the market. So we'll be looking at it, and do have a happy weekend. Bye bye.